good morning. You're watching The Market right here on 18 Hour with me, Asha Faridi, Nikunj Dalmia, Abandabash in the studios. And what happened last week, a little bit of consolidation took place. While we did see 18,300 in sight, from there we fell back a little bit as well. Although on Friday, we just managed to circle around that mark. So that range-bound trade clearly continues. The good thing, of course, is that the FII buying continues and they continue to support our market. Even last week, we've seen now 12 consecutive straight sessions of FII buying. In fact, we've seen a quantum of about 19,500 over the last 12 days. So that really is the key. Continue to support the markets and a lot of data points this morning to look out for.
Aisha, the construct of the market I think is pretty much the same.
Yeah.
It is exactly what it was last Monday. It is exactly what it is this Monday. The construct of the market is following that the market direction is higher. It is consolidating. FIs, the FOMO continues, and at lower levels the desire to participate, I think, in mid and small cap stocks is only increasing. So you will see a bit of a chop and churn in mid and small cap stocks, but in general the approach I think does not change. Stay long, don't go short. This market I think is on course to make a new high. Will it be made in May or will it be made in June? That's anyone's guess. But for the moment, I guess bulls have an advantage, bulls have an edge. You may spend some time here, get nicked around by a couple of, a few hundred points on the Nifty, maybe 1,000 points plus on the Bank Nifty. But that I don't think changes the basic construct of the summer rally 2023. I'm calling it the summer rally of 2023, where I guess the last part of the rally is yet to come.
Okay, so that's the construct of the market. A lot of moving parts, but as we said, it's pretty much been the same for the past many trading sessions, and that chart really tells the tale. For the last 15 sessions, we've been in a tight range. A quick roundup of the global markets. It was a second straight weekly loss on Wall Street, very flat close on Friday. This morning, the Asian screen as well is looking a little bit mixed, and you've got the SGX Nifty as well, indicating that it could be a bit of a soft start. But the other big talking point is definitely on the political side, and the fact that there was that very emphatic victory in the Karnataka Assembly elections this time around by the Congress, which will not only help them retain their 3 Rajya Sabha seats next year when the 4 upper house members retire, but also take the strength from the existing 5 to 7 in the next 3 years. Nikunj, any implications from a market standpoint?
I doubt it very much, and I'll tell you why. Because the exit polls, in a sense, indicated that it is going to be in Congress victory. So, frankly, from what the exit polls indicated, and markets reacted to exit polls, markets always react to the exit polls. And if the final outcome is not in sync with what the exit polls have indicated, then markets, they get surprised and they react a bit more. So, I don't think from a verdict standpoint there is any kind of a change in what the exit polls were indicating. So that is not going to be a market moving news. Since we have the big election in 2024 and you've got state elections, you've got Mizoram, you've got Chhattisgarh, you've got Madhya Pradesh, what could have been the implications of that? Now, is this a time when the BJP government will have to do some soul searching and say that, okay, what can we do differently in the run up to the 2024 election and for the state elections? So the two eyes I look at it is, one, in Karnataka it was anti-incumbency. That's how Karnataka has always moved. One gets voted out, the other one comes out, the cycle continues. That's the pattern of that state electorate there. But second, and I think more importantly, is that please remember there's an anti-inflation verdict also here. And this year we may, I hope not, fingers crossed, we may have the El Nino impact. So really at the lower bottom of the pyramid, semi-urban, that there is a bit of an inflation pinch and there could be a bit of a chug and a struggle if monsoons are not great here. So you could actually see more welfare schemes getting rolled out, more focus on inflation. I guess now what you will see is going to be focus on welfare schemes and more anti-inflation measure. By the way, inflation has already come down, so it will have an impact with the lag effect. But that is something which I guess the current administration would be cognizant of. Simply because next 3-4 months they say that the 3-4 state elections will be more like a semi-final for the grand finale in 2024.
Yeah, absolutely. That's exactly what CLSA as well has said on the Karnataka election verdict, saying that the Congress party, while it ousted the ruling BJP, all opinion polls see PM Modi re-elected in the 2024 elections. And to the point that Nikunj was making about inflation, stating that rising anti-incumbency with high inflation and unemployment definitely is prevalent, and they expect the government to combat inflation with price controls as well as subsidies, and they see support for rural demand in El Nino. Having said that, a lot of earnings as well to Lumber Crunch this morning. You've got a good set coming in from both DLF, HPCL, from Tata Motors, Naveen Fluorine, GE Shipping, some of the more actively traded counters, an inline set from an Ami Organics, from an IOB, from APL Apollo Tyres, and a weak set then from Manappuram Finance, from Avenue Supermarts, from Affle India, and from IGL as well. Some of these companies we're going to be chatting with, of course, in the due course of the show today. And earnings today, you've got PVR, you've got Pfizer, you've got Century Ply. But largely so far, this quarter has been an inline set. There haven't been any extremely negative surprises barring IT, I guess.
I mean, if you think about it, within IT, it was also Infosys.
Infosys, yeah.
I mean, that's really been the ISO, so to speak, for the large Nifty 50 numbers. Barring that bit of, bit here, bit there, you may see individual downgrades in some companies, but in general, I guess this earnings season has been satisfactory. The forward-looking commentary coming from banks, FMCG companies, consumer companies, auto companies, they are not bad at all. That's a scorecard for you. What is important here is that companies where numbers have been in line and where they have been above, the weightage of some of those companies is far higher than the 10 companies where the weightage of the stocks is much lower. But since we are with numbers, the big one which everybody tracks with a magnifying glass is Tata Motors. Numbers came on Friday, and numbers were not bad. Tata Motors is beating the market, both with their debt reduction and their margins on the EBIT margins on the JLR front. So frankly, from a market standpoint, these numbers are good. Now, if numbers are good, what happens to the stock? My sense is that it may not see a large reaction, so to speak. See, numbers are made not because the stock has gone higher. They are based on what the projections of the company could do. And I feel that the stock run-up in anticipation of the numbers has been quite strong, and it has been quite decent. So it really could be a case of buy the rumor, sell on news, at least for Tata Motors in the short term. And why do I say that? Nothing wrong with the numbers, but I guess markets were anticipating a numbers beat. And when you're anticipating a numbers beat and the stock is run up, then it really could be a case of I told you so. So I hope not, but Tata Motors could be a case of I told you so.
Although DMart, I wonder what led to the miss on margins, because that's also is a very, very widely tracked company.
No, it's a retailer which is sensitive to inflation. It's a value retailer at the end of the day. See, in a value retailer, what you have to do is that when product prices they go higher, and your proposition is that I will always be sasta sundar tikhao, I will always sell at a price which is much. If you come to me, you will get bulk. You spend time with me, and you save save money. They had to take haircut. They had to compromise on their margin. So whatever merchandise they were doing, they had to mark down their merchandise, because they had to mark down their margins, because you cannot take the merchandise price higher simply because that loses your proposition. See, the DMart management knows the consumer psyche, and they are not here for a quarter. They are here to build a franchise which would last for years. And typically when the customer has a belief that a DMart store will always give you something cheap in a tough market, you may say, okay, 2 quarter theek hai, I will take a hit on my balance sheet, but the customer is not going to step out to some other store, or will not migrate to a Reliance store, or to a Jio platform, or to ONDC,
Yeah, they're going to stick with DMart, and which is why actually you've got the brokerages as well that maintain their whole rating or their equal rate rating on the stock. In fact, Morgan Stanley has said the store additions or the e-commerce, all of that is going to be a key positive in the long run, and their stable basket value as well. Moving right on then, let's discuss the macros. And you also had India's retail inflation, the CPI print, and that eased to an 18-month low. So 4.7% is what we saw in the month of April versus what we witnessed last month at about 5.6%. And this is something, Nikunj, that you were alluding to as well, that the trend of inflation is lowering.
See how beautifully it's come down. And we are talking about April, where crude came off in the month of May. So that is something which we must also recognize, that the subsequent print of inflation is actually going to come down. Avan, I share something and I was just thinking through it, and I was traveling, so when you travel you get time to think. And I was just thinking through it that in this entire inflation global crisis, Indian inflation has not gone to 9 or 10%. So it's not gone above that really
Unbearable mark.
unbearable mark.
Yeah.
It's the global inflation which has gone above the unbearable mark. So Indian economy can withstand a 4 to 6% inflation, or 4.5% to 6.5% inflation, and that's where I think we've peaked out. So I think this is fantastic news that inflation comes down, interest rates they start peaking out. So if we are in for a period of benign interest rates, which is where we would be. Shaktikanta Das has been really ahead of the curve in calling out the inflation peak, and he did not move in the last credit policy when every central banker is moving. I think it's quite commendable. So things are just falling in the slot now. FIs are back, inflation is down. All we need is little bit of hope and some prayers, perhaps looking up every day, that we get a good monsoon this year.
Yeah, absolutely. In fact, Governor Das also shared his view on the CPI numbers. Let's listen in.
Very satisfying to note that the consumer price inflation last month it was that is in the month of March, which really data was released in April, on April 12th. The consumer inflation, the headline inflation was 5.7%. And the inflation number for April, which was released today, was 4.7%. So it gives me and my colleagues in the Reserve Bank to say with reasonable amount of confidence, in fact, I would say with good amount of confidence, where we stand today, the country's GDP is expected to have grown by 7% last year, 22-23. Current year, 23-24, we have given a projection of 6.5% from the RBI. And we are quite optimistic and fairly confident that the actual growth will be close to that. Although international agencies like the IMF have given lower projections, but we have sort of shared our thoughts with the IMF, and we are reasonably sort of optimistic and confident that the growth will be close to 6.5%.
Okay, that's the RBI governor talking about the CPI print, but the big one on the corporate radar is going to be the Adani Group, and I say group because there's so much news flow coming in on the Adani Group. First, of course, is the one on Friday. We were all awaiting that judgment, but that got pushed back. Remember, the Adani Hindenburg Row is going to be taken up once again in the Supreme Court today. That and a sizable fundraise all across. So, in total, they're looking to raise about 21,000 crore rupees. So that's a war chest that they're getting ready. The board has approved raising funds via QIP or other modes. For Adani Enterprises, it's 12,500 crore rupees. For Adani Transmission, the board has given an enabling resolution for 8,500 crores, and they're going to be seeking the shareholders' approval for the same. Also, Adani Total Gas and Adani Transmission, as well as Adani Green Energy, they're going to be moving out of the ASM framework today. And I think key, of course, is the market reaction to the fundraising that we will see, Nikunj, given that the SC judgment is still pending.
Yeah, so SC judgment is something which you cannot comment on because it's sub judice. Sure. But fundraising, let's understand that. 21,000 crore, I think, is an enabling resolution. Now, it's not that they're going to go and raise capital tomorrow morning. But the fact that they are raising capital via the QIP route, it means that they do not want to lever more debt on the balance sheet. See, typically markets are not worried about equity issuance because the nature of the Adani Group of business is such that, frankly, it's cash flows and it is based on the book value, order value, and the assets which they have. Those are the parameters on which investors, they buy the stock. Nobody is buying the stock because of an EPS and PE. So if they're raising money via the equity route, that means that they are not looking at raising more debt. B, I think this is just an enabling resolution, and enabling resolution means that they may not be going out and raising cash immediately, which means that whenever the need arises, they would be looking at raising cash. It would be interesting to see that post what happened to the Adani Enterprise FPO, which is where they got interest from large institutional investors, but the retail kitty did not got fully subscribed. What quality of institutional investors now would be coming in? That, I think, for me becomes in primary importance whenever they raise capital. But one thing is that if the fundraising happens, Aisha, it means that Adani Group, which we all thought that would be cutting down their investment plans, they're not looking at cutting down their investment plans. So that's good news.
And that gives market the confidence as well, right?
Yeah, I mean,
and 21,000 crore rupees rupees is no small amount.
I think it's an enabling resolution,
Yeah.
so they're not going to raise everything in a
course,
jiffy.
yeah.
It was like the Adani FPO, which was 10,000 crore, and it had a promise of doubling it up. So the size is not that large. They may increase 4,000 crore, 5,000 crore, depending on what their capital need is. So I think they're conservative now. Do not want to raise debt, raise equity or raise capital whenever the project requirement is. For example, it could be for airport acquisition, it could be really for the green hydrogen plants. But if they're able to raise capital, that means that the plans what they had in terms of growth, in terms of expansion, in terms of entering into new businesses, that remains unchallenged.
Okay, and we will be connecting with Vineet Bulinjkar as well to discuss this fundraise in a moment. But in the meantime, we've got our chartists, Nooresh Marani and Kunal Botra here to talk about the market setup and top recommendations as always. Hi, gentlemen. Good morning. And Kunal, let's begin with you. Consolidation, and that continues, but that's not necessarily a bad thing, right?
Yeah, I think it's a good sign that the markets are consolidating in a trading range. 18,350 approximately has been the range for the index. We managed to dilly-dally into this range almost 3-4 times, coming close to that 18,050 mark, and on the upside we managed to break past about 18,350 levels. But then there is no meaningful breakout or breakdown for the indices over the last couple of days. Sector components and the sector churn has also been quite strong, right from the likes of the IT stocks making a mild comeback, pharma stocks looking quite strong, and I think on Friday we saw the bank Nifty also looking quite charged up. So all in all, a good sign. The only concern which is emerging on the charts, the only one factor, which is the rise of dollar index, which I think has come back towards a 3-week or a 4-week high, crossing that 102 mark. That's the only point of concern, because historically we've seen that, for example, in the month of December 2022, when dollar index started to get into a mild rally, that caused a good correction for many of the emerging markets. So that's the only concern in terms of a short-term charts. We need to see a follow-through price action this week for dollar index, but that's the only concern emerging as of now.
All right, let's find out what Nooresh makes of the market setup as well. And Nooresh, we wrapped up Friday's trading session just at around the 18,300 mark. With the broader market seeing that underperformance, what's the outlook on the frontline index? Do you think we're likely to build up on these levels, or still more consolidation in sight?
So what is interesting is on Friday we broke out on the bank Nifty. We made a recent swing high, crossed about that 43,700, 800 mark. And we are seeing new leadership come up in the banking space. We are seeing Axis Bank, IndusInd Bank take leadership. ICICI continues to do well. The only stock left which could really make a change is HDFC Bank. And Kotak Mahindra Bank also is getting closer to that 2,000 mark, which has been a resistance. So overall, Bank Nifty has now become an index to watch out for going forward. And that makes the overall trend positive, because Bank Nifty was closer to the previous highs of 44,000 and could take some time. But the leadership seen in the banking space indicates that the consolidation, the drift could continue to be on the upper side slowly and steadily. So overall positive on the markets, looking out for a buy on dips on the indices going forward.
Okay, let's find out what are the individual stock recommendations then this Monday morning. And Kunal, take us through your top recommendations.
So I'm betting on ICICI Bank to get into a breakout mode. Interestingly, on the hourly charts, it's forming a ascending triangular pattern. The stock is on the verge of a breakout. Hopefully, the stock crosses that 950 mark. We can expect a decent breakout for ICICI Bank. 980 as a target, stop loss at 920. And DLF has been one of the recommendations which I flagged off last week as well. Looks interesting as a stock. Swing breakout on the hourly charts, suggesting a buy. 450 as an immediate target, stop loss at 420.
Right. Nooresh, what stocks have you picked out?
So being a little defensive and contra here, first is a buy on Larsen and Toubro L&T, which has corrected post the results. The stock is back to testing the 2200 mark, which was a short-term support in a breakout zone. Expecting a bounce back from here. The whole capital goods segment has done well. We continue to see new highs on ABB and Siemens. So L&T still has a lot to catch up. The reaction right now is a good opportunity to buy. Again, a risk reward trade. The earlier base for the stock was 2050. Now I think 2150 should be a base going forward. So a stop loss at 2140 and a target price of 2500. Second is a buy on Apollo Hospitals, which after giving a breakout of 4500 has been making a tight consolidation around the 4600 mark. Expecting this to break out in the next few sessions. A stop loss at 4500 and a target price of 5000.
Vineet Bulinjkar joins us now. Let's connect with them. Vineet, good morning. Thank you for joining us. Break for our viewers that Adani Group is looking at raising 21,000 crore plus via equity issuances. What do you think it means for minority shareholders?
So I think that, I have always been harping on the fact that Adani is a organization which is hungry for growth capital. And once the 20,000 crores, if they're able to raise, it will obviously mean that the growth trajectory is back. So we kind of, once the money is raised or, once the plans are in motion, it would de-risk significantly for most of the companies except for Adani Green, because one of the news items did not have Adani Green in the fundraising plans as yet. So I believe that stocks like Adani Transmission, Adani Enterprises will do really, really well given the fundraise. Along with these, Adani Ports and Adani Gas continue to be our risk-free buy. So if this 20,000 crores comes in, the risk of stalling of projects completely takes off, and then these stocks can start moving up uh, quite well. Of course, there is always that the sword hanging over, given the fact that the SIT has been postponed till August by the Supreme Court.
But Vinny, 20,000 crore at a group level is no mean feat. And it's not that the market conditions are great where 21,000 crore for Adani Group, given that in the past also there have been issues which have been raised, they will get in a jiffy. Do you think this is just an enabling resolution which would be where capital raise could be done in a very methodical manner?
So I believe that getting the enabling resolution will help raise funds for the group. We have seen the GKU come in when people least expected. So I'm very sure that they would have scout the market for interest, and once on gaining the interest, only they would have gone ahead with this enabling resolution.
Okay, so if I have to really break the news for our viewers, do you think this is a clear indication and endorsement that Adani Group does not want to raise more debt? They want to raise growth capital via equity issuance, and this in a sense will ensure that whatever business slowdown, let's say the green hydrogen business, the airport business, other asset heavy businesses which had to encounter, those businesses will be back on track?
Yeah, so definitely. See, Adani Group is going to require debt, sooner or later. The reason being that, if you take Adani Hydrogen, the green energy project itself, it would need about $70 billion. That is their capex plans, right? All that is not going to come by equity infusion. It is obviously going to be a 1:3 kind of gearing that would there. If you take the case of Adani Green, they would also need similar kind of funding. So while majority of the businesses, if you take into consideration, like Adani Ports are pretty stable, and the company earns about $7 to $8 billion of internal revenue generation is there, for the entire group. So I think there would be a tweaking of the plan so that the money is put into the most viable alternatives, and where they can fast track the growth. So given that, I believe that initially money will come in the form of equities, and let us not forget that are going to see interest rates climb off from their highs in global markets. If the recessionary trends continue, and that would be sucker for the Adani Group to raise more debt going forward.
Sure, point taken, Vineet. Thanks as always for taking our time and analyzing the news piece for us. Okay, on that note, let's take a very quick break. By the way, the SGX Nifty is indicating a mildly soft start, but that's mildly soft is how the SGX Nifty has been for the better part of last week as well. So let's see which way we head. Just challenging that 18,300 print, however. We'll take a very quick break. When we come back, tell you all about the stocks that you need to watch out for this Monday morning.
Welcome back. Still tuned into the market. Now, during an event that took place over the weekend, two eminent voices in India Inc. spoke about the India growth story. We had N. Chandra, the chairman of Tata who said that the country has the best talent available on the digital front and can achieve much more supply chain in the ecosystem. And you also had the G20 Sherpa and former CEO of Niti Aayog, Amitabh Kant, who said that the bullish story, growth story for India continues to remain, and we're poised to see robust growth with massive contribution from the private sector. Listen in.
Unique opportunity for India for multiple reasons. There are 3 transitions and there are moving geopolitical situations. From the transitions point of view, the first is digital and AI, second one is energy, third one is supply chain. In all the 3 transitions, I would say that India is probably the best placed country in the world. First, on the digital, just 2 primary reasons. First, there is no country in the world which has demonstrated a large-scale digital intervention and digital platform for public services delivery, which is transformative at scale.
Private sector is the key. The book is based on the fact that private sector should drive India's growth story. The government has to be just a facilitator and a catalyst and a coherent policy maker. In the long run, India's growth story has to be totally driven by the private sector. That's my belief.
And sir, what, according to you, what would be the challenges? Because you said that India is poised to
A
grow.
lot of structural reforms have been carried out. We've done a huge amount of reforms in terms of GST, IBC. We've digitized our economy. We've done decarbonization. So this is the opportunity for the private sector to leapfrog and go ahead technologically, make a quantum jump forward.
Right. In fact, commenting on stage, let's also hear out what Uday Kotak had to say from the same event.
If we have to grow forward, I think these are risks. I think Indian banks have to be able to understand and manage these risks, like acquisition, financing, project financing. We got into trouble on infrastructure financing.
Yeah.
If you look at 2008 to 2018, it was a year when we did not get infrastructure financing right, and banks took the wrong risks because the guardrails of the system were not in place. Therefore, we need a unified, well-coordinated system, and I do believe India has the brain power and the risk management to be able to manage a financial sector which meets the aspirations of all of India's growth as we go forward.
All right, let's put the spotlight then on automaker Tata Motors. Revenues jumped to 1 lakh crore in Q4. They also managed to pare their losses from last year, and the management remains optimistic when it comes to demand. Let's bring on board Shrishti then to break down Tata Motors' earnings for us. And Shrishti, it was an inline set.
Well, a great set being reported by Tata Motors in a quarter gone by. Not just that, this was followed by a strong management commentary when it comes to their debt reduction plan as well as the free cash flow generation. Talking about the numbers, the company reported a profit figure of 5,400 crores. That is exceeding the expectation of 4,300 crores. Well, in terms of the revenue, EBITDA as well as the margin on a consolidated basis, they have come in line to the ET Now estimate with the margins of 12.1%. When it comes to their JLR division EBIT margin, there we have seen an outperformance versus 6% of expectation. The company delivered a 6.5% on that number. Talking about their JLR division, the guidance remains strong where they say that the investment spending is expected to be £3 billion for FY24. The free cash flow generation is expected to be over £2 billion for FY24, as well as the net debt is expected to reduce to less than £1 billion, and that will be in rupee terms 10,000 crores from current 30,000 crores of net debt for their JLR division. For their India division, the net debt now stands at a 15-year low at just 620 crores, and the company has guided that in this financial year itself, you can see the net debt being zero for their automotive division. When it comes to their dividend play, a key to watch out for, the final dividend has been announced at 2 rupees per share and 2.1 rupees per share for their DVR shareholders, and that's what the management commentary is like. why going ahead they are optimistic on the demand. So strong set by Tata Motors.
Okay, strong set for Tata Motors, but a muted one for Avenue Supermarts. Lower consumer spending in general merchandise, apparel has impacted their margins. What else has been ailing their Q4? Let me take it across to Vinny and understand that. Vinny?
So in terms of the numbers that we see for Avenue Supermart or D-Mart as we know it as, revenue obviously came in line because we have the operational update coming in. 10,337 crores is what the revenue came in at, a growth of 20%. Profits of the company, a mild growth of 8.4%, while the operating performance, that's where we saw a bit of a weakness coming in as well. EBITDA was only up by around 5%, while the margins, the EBITDA margins of the company have seen a contraction coming in of around 100 basis points, 7.6% versus 8.6%, and also that is below the expectations as well. So profit and the margins were a miss where we saw in terms of the numbers coming in from the company. Now mainly what is impacting the numbers, slower recovery, that is our impact coming in. Other than that, there's an adverse mix, more of the sales of the products other than like FMCG and staples, that has continued to be higher compared to the general merchandise and apparel category, which is impacting the margins of the company and overall in terms of the revenues of the company as well. So that lower contribution and lower adverse mix is something that is impacting the margins of the company. Other than that, they are also seeing a decline in terms of sales per square feet as well. That has also become lower, as well as store additions on the other hand has continued to remain strong. The company has added, store addition was robust, added around 40 stores in FY23. Keeping an eye out on that one, but all in all, as of now, the numbers were quite weak. Nuvama is maintaining a hold rating, cut the target price to 3,913 rupees per share. Morgan Stanley maintained an equal rate rating, target price at 3,853 rupees per share. They believe the negative is the weakness in the discretionary demand that has continued, so keeping an eye out on that.
Thanks very much, Vinny, for giving us the details on Avenue Supermart's earnings. Meantime, HPCL, it's been a strong Q4. Profits and margins have risen sequentially. Let's bring on board Somit, who joins in with all the number crunching. Somit, morning.
Well, for HPCL, if you see, it was a strong set of numbers in the fourth quarter of FY23. The company's EBITDA grew nearly 3x because of higher refining performance. Now, if you see the Singapore gross refining margins of HPCL, that came in at around $14 per barrel, as against street estimates of close to $10 to $11 per barrel. So, big beat coming in the refining segment. The net profit was aided by higher other income and lower finance costs. Now, if you see the company's gross debt, that also remained largely flat on a sequential basis. But the important announcement coming in case of HPCL was the fact that the board is exploring options to carve out the high growth and highly valued the lube business. Along with this, the board has also approved creating a 100% subsidiary for consolidation of all its green and emerging business opportunities. Now, on the lube business, if you see, it's highly valued because HPCL's current valuation is close to 4.3 times its EV to EBITDA, while a standalone lube manufacturers gets a valuation of close to 9x, so it's nearly double the valuation. Now, HPCL owns and operates the largest lube refiner in the country, and the lube refinery accounts for nearly 40% of India's total lube-based oil production. Now, the annual sales of lube stands at close to 0.6 million tons per annum, and it is the largest supplier to industrials, and in the consumer segment, it has a market share of more than 20%. Also, in FY23, it has gained nearly 250 basis points of market share from its peer. Now, HPCL's lubricant segment nearly contributes around 1,200 crore to its EBITDA, and if you see Castrol's 9x valuation, if you apply the same valuation to HPCL's EBITDA, then the value of this lubricant business comes to around 10,800 crore rupees, which is nearly 11% of HPCL's enterprise valuation. So keep an eye out for this. Now, on the consolidation of the renewable and the new energy linked business, not much of information is available so far, but as of FY23, nearly half of HPCL's 21,000 retail outlets were powered by renewable energy, and EV charging facilities were available at nearly 10% of those. So keep an eye out for this new announcement coming in from HPCL.
All right, Sumit, thanks a lot for that. Anuj Khanna joins us, founder and managing director and CEO with AFLE. Let's take our conversation forward with Anuj. Anuj, good morning. Thank you for joining us. How have you been? Haven't connected with you in a while.
Good morning. How are you?
All well. Can I say the same about your numbers? Because all is not looking well there. Because I'll tell you why. Because I'm used to tracking AFL, which is a high growth company, grows at 30-35% plus. Suddenly revenue growth for Q4 has gone down to 12%.
Well, let me explain that. If you look at the overall annual performance of this year as well, the CPCU business has grown year-on-year basis over 35%. And when we look at this particular quarter itself, we would see that in India and emerging markets, which contributes about 82% of our business, we actually grew 20% in that business as well, year on year. And in fact, with margin expansion, if you see the overall margin growth, EBITDA growth for this quarter versus the same quarter of the last year, we grew EBITDA by about 22% plus. So overall, I think we remain a very strong growth story from a overall perspective. Having said that, in the last 2 quarters, what has happened is that in the developed markets, particularly US and Europe, we saw some headwinds with respect to the macroeconomic conditions. And we have also calibrated a very clear turnaround plan so that this year, FY 2024, we can deliver around 20 to 25% organic growth going forward as well. So we continue to remain a very strong growth, long-term growth story as far as our performance, even in the last quarter or the previous financial years are concerned. You've got to look at it as an overall trend. And when you slice and dice the numbers, you find that India and emerging markets continue to be strong, resilient growth in the 20-25% range, which is consistent with our guidance. Our margin expansion story is very clearly coming out. And all that remains to be solved is the developed markets where the macroeconomic conditions are well known to all of you. And how we are turning that around this year is what we will demonstrate as we go along.
But what is the situation and sentiment on ground, Anuj? Because, everywhere around us, we hear about digital, ad spend, mobile marketing, all of it going up. From a CAGR of 55% in the last 5 years in terms of revenue. Do you really think there is growth potential in the medium term?
Well, you see, we have been guiding very consistently that organic growth should be very sensibly in the range of 20 to 25%. And we have already delivered that in India and emerging markets consistently, even through the last 2 quarters where there were clearly quite a lot of headwinds. So even with those headwinds, India and emerging markets, which is 82% of our business, grew very nicely in the 20-25% range, right? And with margin expansion. So there is clearly growth in the market. There is growth to be tapped into the market. And like I said, the only thing that we need to really solve is how do we double down and develop markets better, execute better over there. And we have a very strong turnaround plan, which I will be covering today on our earnings call with all the investors.
Wanted to also understand a little bit more when it comes to your margins, because they've been on the weaker side. What is the outlook as to where your margins could sustain? Do you see them trending towards 25%?
I think, if you see even compared to last year to this year, we have seen a margin expansion. Even for this last quarter, I think we have seen a margin expansion in terms of EBITDA. And we have consistently now been giving over 20% EBITDA for the company. And going into this FY 2024, we believe that it is very sensible to see, 20 to 22% kind of EBITDA in that range, while delivering organic growth of 20 to 25% on revenues overall. So, of course, we'll see margin expansion, which means that on EBITDA terms, we should be growing organically much more than the 20 to 25%. So even if you look at this FY23 results, you'd find that we grew, our EBITDA growth was higher than our revenue growth, right? So there is clearly margin expansion. So I wouldn't see weakness in that. I would say that there's a clear trend that we will continue to improve margin by a few basis points each year. And if we take a 3-year view to it, we should be heading closer to the 25% EBITDA over the next 3 years. Yeah.
So let's understand the communication for your shareholders and for our viewers. 2020, Affle was like a high growth company growing at 50% plus. It is still a high growth company, but can I say instead of 50, because of base and because of globally what is happening, it will move from 50 to 25%.
So let me give you a slightly more nuanced explanation of this. When you look at 50% growth, you're combining organic growth as well as inorganic growth, which means that we were doing certain acquisitions that was making the growth 50%. Now, what I'm talking about today is that 20 to 25% organic growth is still a sensible growth forecast model with respect to our industry and specifically with respect to our differentiated business model on CPCU. So it's a very defensible, realistic growth plan for the company to be looking at 20 to 25% organic growth. Now, since we are also deeply profitable and generating cash on a regular basis, even for FY 2023, if you look at our cash flow to PAT ratio is 106%, which means we are basically collecting all the profit and more that we are generating through the year. So what are we doing with that cash? We will be looking at sensible inorganic growth plans as well. And that will yield incremental growth. So if this year, let's say we do another acquisition sometime during this year, that contributing towards the overall growth plan should sensibly take us to the 35 to 40% growth range, even compared to FY 2023. So you've got to look at the numbers holistically. We are an aggressive growth player out there, both organically as well as very sensible and calibrated inorganic growth plans. So when you look at the numbers of 50% growth in FY 2021, you're looking at both organic and inorganic. Within that, the organic growth was around 30% and now we are being a little conservative and saying 20 to 25% growth on organic year-on-year basis is reasonable given what's happening in the market. And given our trend lines and what the pipelines are today, I can clearly see that we are on track to deliver that.
Okay. All right, Anuj, appreciate your time. So glad you could join us and so nice to have you back on ET now.
Thank you.
Sandeep Sabharwal, good morning.
Morning.
You were supposed to come to studio. I kept the ladder ready for you, the car ready for you.
No, I only climb the ropes. I don't do the ladder.
No, I just missed that last part. Sorry. See, audio connection, I told you it's better to come to studio. I can't hear you now.
No, I said you put the rope. You put the ladder. So I came. I saw the ladder. I came.
Next time, I can hear you better. Monday morning, let's start with Sandeep Sabharwal in the studio. How are markets looking?
Markets, I think, fine. Things are going well. Macro-wise, there's no issue. The inflation data is getting controlled. I think IIT is subdued, but somehow I think the IIT composition in India is completely flawed. If you look at the results of various companies and the growth figures being reported by various companies, they don't correlate with the IIT growth. So I think that growth for some reason in India is getting underestimated, especially on the industrial production side. In the global context, also, I think things are stable, so that helps India. And it was expected that eventually we'll see the foreign money come back into India as the outflows had reached a crescendo. So that's something also which we see now, and that's normally supportive. So I don't see the steady flow of foreign money stopping anytime.
Sandeep, finally, patience must have paid off for Tata Motors investors. One of the strongest quarters for the TML group, and even JLR FY24 guidance is looking impressive.
Yeah, things are positive from a projection standpoint. The only risk I see in Tata Motors is, so although we are holding, but we have to be aware of the risks also, is that the global economy is not looking as great, and JLR largely relies on the global economic performance, both in the Western economies and China for its growth. So efficiency and productivity gains will obviously help them and profitability will improve. But for volume growth to happen, we need to see the economic growth stabilize in many of the economies, and that could be a slight challenge for them in just this year. Overall, directionally, I think they are on the right path.
You know, we're talking about FOMO. I guess the word FOMO really applies to foreign institutional investors. The way they've made a comeback after selling India down, it is absolutely incredible. You know, Sandeep, it's like saying, I'm sharing a personal experience. I had to travel to Goa this weekend. I was lazy and late in booking my tickets. And that's an event I had to go for. I couldn't have cancelled it. I purchased a last minute ticket. 1 month ago, the ticket was available at half the price. And since I made a last minute purchase, I was forced to pay a higher price. I get a feeling that that's the same thing which is happening with FIs. They sold India, they went to China in 2021 and 2022. Now they're forced to come back, and when they're coming back, they themselves are bidding the prices higher.
So, Nikunj, that's the challenge in value investing. That value investing without growth becomes a value trap. And that's what China is today. All of us need to recognize that the structural issues in China are so great, both related to their over-investment cycle for almost a decade, combined with the high debt of their local governments, a lot of it which is hidden under different structures, and the fact that they have reached a demographic peak, and given their demographics, the population decline over the next 10-15 years is going to be so steep that it will be a negative impact on GDP. So I think so. A lot of these investors don't do that long-term analysis; they just look at valuations and invest, which is somewhat flawed. So I think India stands much stronger, and I believe that over the next 1 or 2 years, this phenomena will even get more entrenched.
I'm going to shift gears and talk about some breakout stocks here. And for a change, Nooresh Mirani, the one you track, it'll make you happy and smile. I can guarantee this one because the name is Delta Corp.
So finally,
See,
the stock
without
has.
me prompting, you are smiling. Kitna Delta Corp hai bhaiya? How much have you got?
I have a basket, but I've been a contrarian on this whole space, hotels, as in the whole theme. Delta Corp is a stock which has been, say, over the last 10, 12 years, the stock was always, say, a story stock which never performed. Over the last 2 years, 3 years, if you look at the performance in terms of earnings, etc., it has been much, much better. But the story somehow seems to have dissipated and the market interest has gone off. And that is where the big opportunity comes in if one has a little longer term view. The stock has made that base around that 180 mark, which it did not break in the last 1 year, 1.5 years. Finally, after yesterday's move, the stock has become a higher top, higher bottom formation in the short-term charts. Short-term trend change done. A bigger breakout comes into play about 235 levels, which is the high for the last 1 year. So overall, the whole space looks interesting. If you look at globally also, the space has been doing well. And if you look at even EIH Limited, we are close to 52-week highs. So this whole space of hospitality looks very interesting. Delta Corp looking out for a breakout about 230, 35 to actually trigger a much bigger move in the stock.
Sandeep, at this current juncture, if markets are looking good and decent, what should be the best strategy? Ride the momentum, don't be in a hurry to sell. The best of the summer rally of 2023, that's not over?
I don't think the rally is over because the rally just started last month, and if you see from where after 4 months of fall, the markets are up just 4-5%, or I think slightly more than that. So it's not that we've had a runaway 10-15% rally and then we need to worry about it. So overall markets look well placed, and depending on what people are investing into, I think holding your horses is the best strategy. Normally, I do keep some cash on the sideline as a all-time strategy, so that whenever some very good opportunities come, we can deploy it. But X of that, one should be more or less fully invested.
Sandeep, real estate, that's one space that you track. And just looking at DLF's performance, the Q4 collections came at 1,929 crore rupees versus 1,398 that the market was anticipating. So clear beat there. And the net debt as well has declined. Having said that, is the best already baked in the price at 435?
I don't think so, because I believe that real estate stocks, especially if we are talking in the context of DLF, it had a good run up from 2020 in 2021, 22, almost for 15-17 months. It had a phase of consolidation when the monetary cycle was on an up cycle. And as the monetary cycle has peaked, we have seen that from there on, the real estate stocks again started to outperform. And I think if they have been able to sustain their growth throughout the rate hike cycle, then now is not the time to worry so much. So I would be positively inclined. I would still think that DLF should have more upside given the recent data which they have put out and their outlook.
On with us, let's hear out some top fundamental stock ideas from Dipan Mehta and Hemang Jani.
That's right. I think that certainly does open a risk factor for Zomato, but it also opens an opportunity as well, because on the ONDC, as I understand, you still need delivery partners, and maybe Zomato could offer just its delivery services over there. So I think it's a very volatile and fluid situation, And the success of ONDC also needs to be tracked very closely, because quality assurance is a big factor on ONDC, which other platform companies, be it Swiggy, be it Amazon, do offer, and the comfort level is higher with such platform companies than newly established ONDC. So I think it'll go through its phase of maturity. It'll go through its phase of understanding and acceptance. But for the time being, I think Zomato and Swiggy are going from strength to strength. It's a fabulous duopoly, and they are changing habits as far as consumption is concerned. Eventually, it's going to become more and more mainstream ordering food from outside than cooking at home, especially with the millennials and the Generation Z. So I'm still quite positive on Zomato at its present valuation. But yes, you have to keep an eye on all the disruptions which are taking place within the sector. So, I mean, Zomato was a disruptor itself. Who knows, it could get disrupted by something else like ONDC. And it's not that you're going to bet the bank on a stock like Zomato. It's just that you want to have a small position in it, because eventually, I think if they're able to show profits and go fabulously in the black, then this stock could be a multi-bagger over a 5-10 year period.
In terms of the mid cap names, we have been liking something like PTM and Zomato that we had already discussed. I think these are high risk, high return ideas for sure. I think Mankind is something that would present great opportunity for the momentum players. You might see a little bit of swing or volatility, but surely it looks like clean trending story at this point of time. Apart from that, some of the numbers that were good, I think one can really look at SRF, where the chemical business, performance was extremely good. And as I said, some of the NBFC companies, Mahindra Finance and Chola are the ones that we've been liking at this point.
Meantime, Sandeep, just curious about your take on PVR Inox. Will be coming out with their numbers, the merged entity, for the very first time. So, of course, there's no comparable numbers. But given the fact that apart from select movies, there have been nothing but a spate of flops, do you think it's going to be a tough road ahead for PVR Inox?
Road ahead in these companies is very tough to predict, because it all depends on, I think, how the overall box office pans out, the quality of movies that come out, etc. Overall, the theme is the strong one of going out as incomes increase, people go out more, spend more on entertainment, etc. The challenge has been the extremely poor response to Bollywood movies over the last few quarters, with few successes in between. So it's a trend which has got broken, where we used to periodically have good hits. Even the big star movies have not worked, and that's the challenge the stock is facing, and that's why it's more near a 52-week low. So now, I would think that there are no triggers to buy immediately. But if someone has it, I wouldn't be a seller, because I would think that with just small triggers, when stocks are at 52-week lows and the industry is such a duopoly kind of in a situation now, we could see upsides if things start to turn around. So I think, but that's something we need to wait for.
Globally, is that a lot of these so-called halo names are reversing. The stock of Airbnb is down, Marriott is going higher. The stock of Netflix is down, and traditional multiplexes, whether it's in India or globally also, they are making a comeback. The world suddenly is looking very different. This whole idea of asset light, don't create asset, everything is user generated, everything will be funded by PE investors. All that is just reversing, my friend.
Yeah, so I think hotel chains, global hotel chains are doing very well. That's a phenomena which is there, and that's something we see in India also in terms of how Indian hotels is done. So I think it's always a phenomena where the markets take some theme to extremes, then they get sold out, and they might go to extremes on the other side. That gives them buying opportunity. So I think that's how the markets are. It's cyclical.
57 rupees for Indian hotels. Boy, I mean, what are numbers? What a year it's been for Indian hotels. 60% higher for Indian hotels in last 1 year. And every time I say Indian hotels, Nooresh just feels happy and rich. Happy and rich is the word for you, Nooresh, right?
I would say much more to come. The view is there is much more to come in the wholesale sector.
I say Tata Motors, guess what? Who feels happy and rich? Kunal, any guesses?
Yeah, I'm looking at my phone. I don't know.
No, Sandeep's about Tata Motors. Kunal, I was not referring to you.
No, that's why I'm looking at the phone. I said.
Every time I say L&T, who feels happy and rich? Sandeep Savarao. Sandeep, till what price you will hold L&T?
So I think given their result delivery, we should see a phase of consolidation now because it's had a good upside because the results were not as so they were below expectation on margins and despite the growth outlook being very strong, they have been underperforming on the margin side for some time. So it needs to go through a phase of consolidation now. There are no triggers as such for one to sell. So if one has over allocation, excessive amount of L&T, then obviously some amount can be trimmed and one can look at some other ideas. But X of that, longer term directionally next 2-3 years look good only for L&T.
What about Indian Hotels? When anyone says that name, I know who gets happy. Nooresh, you for sure, right?
I like the whole hotel space as such. So it's not just Indian hotels. So it's a trend global. It's India. It's everywhere. And it's taken 15 years to come back. So 2006-07 was the time where we saw the sector peak out. And when such sectoral breakouts take place, it continue to surprise. So we've seen Hindustan Unilever do nothing for 10 years and do great for the next 5-7 years. We've seen Reliance do nothing for 7-8 years, then do well for the next 3 years. So I believe that is where the sector is placed. So we'll continue to keep watching the smaller names also in the hotel space. In fact, that is where the shift should be going forward.
I want to go to diagnostic stocks. And why? Because look, when COVID happened, these stocks started trading at P multiples of 50, 60, 70, even 100 times. That big deal from Thyrocare where Mr. Velumani sold out his stake to a online pharma retailer, that made the top for the sector. And then those levels have not come back for a Metropolis or even for Thyrocare. But why am I bringing it up? Because suddenly in last couple of days, a stock like Dr. Lal is making a comeback. Metropolis is up quite smartly from the recent low. Sandeep, because of COVID, these stocks got massively re-rated. Everybody was testing. It was just not COVID, but the additional blood tests, which gave almost like it was a sugar rush or a gold rush for diagnostic companies during COVID. Now realization has kicked in that these are businesses which will grow at 12 to 15%. But at these levels, if you're buying the stock, is it time to be a contra buyer here?
Say, 12 to 15% is too high. So the sector itself will not grow more than 10%, and with the increasing competitive intensity, individual players might grow at a lower rate. Now, in the minds of people, the entire valuation paradigm has got distorted. These stocks should be trading at 15, 20p. Like you said, they went to 100p. Even now, they are trading at 50 odd p, which is too high for these stocks. So I don't think that even these prices are justifiable. We have to either say see more price destruction or long periods of consolidation before we could even consider buying them.
How would you approach a stock like Asian Paints, Sandeep? Expensive, very expensive. But the growth in the quarter gone by has come back, and after that, paint prices, crude and crude derivative prices have gone down further. So while Asian Paints on all yardstick look like a mature business with a bloated P multiple, but for the quarter gone by, numbers were quite impressive.
Yeah, Asian Paints is a phenomenal company. I think the way they perform, they deliver, I think it's exceptional. And that helps it sustain premium valuations. My only concern with the paints industry is that I see competitive intensity increase so drastically going forward after Grasim enters that maintaining high margins will become tough. It's nothing against Asian Paints. It's the overall industry view, and Asian Paints is obviously the market leader out there. So, but their delivery in terms of volumes and profits are so phenomena that it takes away those concerns for some extent. So some upside it gets created, but substantial upside is something which I wouldn't think would happen in Asian Paints. Till the time Grasim enters, we know the new competitive landscape. And once that happens, I think then we'll get a time to look at it again.
60 thereabouts, that's 50 is where Asian Paints wrapped up the previous session. But let's find out what the pre-open rates are and more importantly, the mid-cap strategies from our chartists. Holding out quite comfortably in the green, by the way, that's the initial pre-open take around the 18,450 mark. And for the Sensex, up about 100 odd points. Nooresh, your top mid-cap call?
So that would be a buy on Ujjivan Financial Services. The stock has now come very close to a big cup and handle breakout. The high was in somewhere around 2020 and to 2021 around 300, 320 levels. Made the similar high in 2022 and now we are coming back above the 300 mark. So a classical cup and handle formation out here. The stock has done nothing for the last 7-8 years. Seems like a major breakout in the making. Risk reward trade, keeping a strict stop loss at 294, keeping an initial target price of 330 to start. 330 to start with.
Jivan, it is. What about you, Kunal, your cracker stock?
Well, it's a buy on Glenmark Pharma, stock which I've been bullish on since last 1 or 2 weeks. Looks attractive. The stock managed to break past about the 600 levels on Friday, closed at the high point of the day as well as of the week. Looks attractive. My earlier targets were around the 620 mark. The stock seems to be reaching to those levels, so traders could look at revising the targets on the upside. 632 could be a fresh target from current levels if traders look to initiate a fresh buy. 602 as a stop loss.
All right, Glenmark and Ujjivan, those are the mid-cap trades. Let's move right on, and here is the top Fatafat headlines and news to track across the globe. Finance leaders of the G7 nations have warned of heightening global economic uncertainty as they wrapped up the 3-day meet, which was overshadowed by US debt ceiling stalemate and a fallout from Russia's invasion of Ukraine. The chiefs also vowed to combat inflation and ensure expectations on future price moves remain well anchored. Meantime, in Turkey, people are voting to choose their next president, a landmark election in the country's history as the current president, Erdogan, is faced with the biggest power challenge in over 2 decades. The latest figures, as per the state-run news agency, suggest that Erdogan is logging an under 50% and his opposition is marking an over 44% lead. If neither win majority, they will go into a runoff. That would be the first time for Erdogan. And staying with electoral activity across nations, Thai voters have rejected the military-backed government as 2 opposition parties have appeared to be set for coalition talks. This election has been described as a turning point for the country, which has experienced several military coups in the last few years. And back home, Prime Minister Narendra Modi met with the Walmart chief Doug McMillon as they addressed and discussed a slew of subjects. Post the meeting, PM Modi reiterated that he was happy to see India emerge as an attractive destination for global MNCs. And in a tweet, the Walmart CEO said that they expect exports worth $10 billion from India by 2027 and are committed to extending logistics supply chains to India as a global export leader. And of course, it was a historic win in Karnataka. The Congress now shifts focus towards picking a suitable chief minister for the state, with DK Shivakumar and senior leader Siddaramaiah eyeing the spot. The Congress leaders will be conducting the meeting in the national capital and will be discussing the chief minister's spot as well as the spot for the national leadership. And the latest on the cyclone in Myanmar, which made a landfall over the weekend. Thousands seeking shelter in monasteries as well as in schools. The rescue services as well have suggested that there could be the loss of 2 lives until now. The cyclone has triggered rainfall in the southern parts of northeast India, with South Assam, Nagaland and Mizoram receiving moderate showers. The Met Department has warned of wind speeds reaching 40 to 50 kilometers per hour and even 60 kilometers per hour over Mizoram. All right, let's get a move on. Khabar on Dalal Street. What's that today? Well, sourcing and retail operations provider PDS is making a buzz on the back of their Turkish arm entering into a deal with John Lewis. We've got brokerage house Nuvama, who has given a thumbs up to this deal with a buy rating. Let's find out all the khabar with Sharad, who's standing by. Sharad?
Well, yes, sources to ET now say that PDS's Turkish arm has actually entered into a wholesale agreement with John Lewis, which is a UK-based company, where under this agreement, the company has been appointed by John Lewis, where they will be actually supplying branded goods. Now, looking at John Lewis, they already have a top line of almost £10 billion in the year FY23, and they operate these brands under their own name and also in the Waitrose stores. Now, apart from this, do remember, Enam Group and the related entities have more than 3% stake in the company itself, and the company is having a market cap of roughly 4,400 crore rupees. Now, recently the company did a landmark deal with Ted Baker, which is in London. A long strategic cooperation deal was there, and also with German brands as well. Now, looking at the company itself, the Q4 numbers have been weak largely and below street estimates. And do remember, from the recent high, the stock has also corrected by almost 11%. And of course, the last session, we saw the stock correcting by 7%. Now, looking at what the brokerage are stating for the company, Novama has given a 12-month target price of almost 484 rupees per share with a buy rating.
Okay, thanks very much, Sharad. We shall keep an eye out on that stock. Moving right on and tracking news flow from the Adani Group companies are going to be in focus as the boards of Adani Enterprises and Transmission have approved the plans to raise that 21,000 crore via the QIP route. Let's revisit what Nikunj had to say and what the implications of this news is.
So SC judgment is something which you cannot comment on because it's sub judice. Sure. But fundraising, let's understand that. 21,000 crore, I think, is an enabling resolution. Now, it's not that they're going to go and raise capital tomorrow morning. But the fact that they are raising capital via the QIP route, it means that they do not want to lever more debt on the balance sheet. See, typically markets are not worried about equity issuance because the nature of the Adani Group of business is such that, frankly, it's cash flows and it is based on the book value, order value and the assets which they have. Those are the parameters on which investors, they buy the stock. Nobody is buying the stock because of an EPS and PE. So if they're raising money via the equity route, that means that they are not looking at raising more debt. B, I think this is just an enabling resolution, and enabling resolution means that they may not be going out and raising cash immediately, which means that whenever the need arises, they would be looking at raising cash. It would be interesting to see that post what happened to the Adani Enterprise FPO, which is where they got interest from large institutional investors, but the retail kitty did not got fully subscribed. What quality of institutional investors now would be coming in? That, I think, for me becomes in primary importance whenever they raise capital. But one thing is that if the fundraising happens, Aisha, it means that Adani Group, which we all thought that would be cutting down their investment plans, they're not looking at cutting down their investment plans. So that's good news.
And that gives market the confidence as well, right?
Yeah, I mean,
and 21,000 crore rupees is no small amount.
I think it's an enabling resolution, so they're not going to raise everything in a jiffy. It was like the Adani FPO, which was 10,000 crore and it had a promise of doubling it up. So the size is not that large. They may increase 4,000 crore, 5,000 crore, depending on what their capital need is. So I think they're conservative now, do not want to raise debt, raise equity or raise capital whenever the project requirement is. For example, it could be for airport acquisition, it could be really for the green hydrogen plants. But if they're able to raise capital, that means that the plans what they had in terms of growth, in terms of expansion, in terms of entering into new businesses, that remains unchallenged.
Revisit of the latest news coming in on Adani's massive fundraise. Let's find out what the index calls are as well from our chartists. What are they advising as we're stepping into a brand new week? Consolidation clearly is the name of the game. Kunal's call is no trade and hold, says Nooresh. So divergent views coming in on the Nifty index. Let's find out what the view is on the Nifty Bank, and looks like it's completely unanimous. No trade from Nooresh as well as Kunal.
Nooresh, no trade means what? I mean, just don't trade the bank Nifty today, come tomorrow and take a fresh guard?
Yeah, so looking out for, say, a little bit of a dip. If that comes, that is the point you want to get in. So at 43,700 odd, the risk reward is not great. We've seen a small breakout. So closer to 43,400, 500 you want to buy. Or you want to buy in a fresh momentum in Bank Nifty when two of the largest weights have broken out. So we are not seeing a breakout happen in HDFC and Kotak. So either we go above 44,000, which triggers a fresh buy, or you wait for a dip.
Kunal, the same logic. No trades mean chutti hai.
Yeah, noted means we're not expecting any kind of a trend for the indices. So Nifty is still stuck into a range. So if you break 18,385 or maybe 400 as a round figure on the spot levels, that could be a point of a breakout for the index and maybe initiate a buy over there. And for the bank Nifty, it could be around 44,000 odd mark. So those levels have to be taken out for us to try and get back into a zone where the index could start trending. As of now, we're just seeing the index dilly-dallying into a trading range with no kind of major activity. In case if the index dips, say it drops down, say 50-80 points on an intraday basis, then also it could be an attractive buy, but not at the current levels.
Just curious, Kunal, with your take on crude oil prices, given that we continue to see a decline on the back of as well a stronger US dollar, what's your view on where crude could be headed?
So I think crude chart specifically, we discussed this, a few weeks back that how the $78 to $80 per barrel on the, on the Brent crude specifically is acted as a major pivot for Brent crude. $88 is a huge resistance, and on the downside, I think $72 is where there's been a major support for Brent crude charts. So I believe if we break down below the $72 per barrel mark on the weekly closing basis, that could be calling a significant correction for the crude oil prices going forward. So trajectory is downside. We were just trading into a range. Hopefully that range breaks on the downside below that 72 mark, and I think we can see a further correction there.
3 minutes to go. Brand new week. It's a week where expectations frankly are not too high, but in terms of concerns, they are also getting diluted. The bond market, the 10-year paper, which was threatening to go above 8%, a lot of folks said that, okay, end of the world, inflation is going to just remain high and elevated. Guess what? 18-month low. Bond yields go below 7%, PSU banks could be in demand. But I would use the word FOMO again. It is FOMO. It is FOMO, which foreign institutional investors are feeling. From selling a market down and from selling the market down for entire 2022, look at what they're doing. They're coming back. They're coming back, and they're coming back at higher levels. Why? Because India is the only option. India is the best in terms of governance, political stability, valuations, and more importantly, a combination of growth, demand, and the rate of change, which is very constructive. So welcome back. Hello, my friends. India is where you want to be. How much have they pumped in? Look at this data. 1,000 average, which means 4 days we are looking at about $500 million. $500 million has just come in last 4 days. And this does not include any large, blocks or any large, QIPs, or does not include any large issuance. So this is pure, clean, vanilla money which has come into it. Now imagine if this number reverses. What if they turn positive for the year? Domestic institutional investors are sitting on their highest cash levels ever. So they are not buying right now, they're churning. 15,000 crore of flows from the SIP front is coming. So if the index goes higher by another 5% or 3% from here, then we could have a situation where domestic institutional investors will be forced to reduce their cash because you cannot run such a high cash portfolio. So DIs are sitting on high cash, they're getting flows, and FIs are back. There's no seller. It's like saying for a market there were no buyers, there are no sellers. And that's what happens in the short term, buying and selling mismatch. Do you agree with me, sir?
Yeah, absolutely. And I was actually shocked at the number. 31,000 is still negative
exactly.
on a YTD basis.
What it just turns.
Yes, exactly.
You think it'll turn?
Let's hope so.
Why do you think it'll not turn?
No, I think, so the momentum is good. The momentum of the last 2 months is good, and it gels with the overall market theme. I think 5,000, 4,000 crores odd in the month of April so far, 13,000 plus in the month of May so far. So let's hope that we, just speed on to the momentum for the indices. That could probably speed up to the more FI buying as well. Let's see.
20 seconds to go. First rates will just start kicking in any second on your screen now, and it's not going to be okay now. The SGX and the pre-open rates are telling you that we could be in for a smart start. And if you're in for a smart start, if you're able to build on that, then again we are going to be moving very close to the new high. By the way, the new all-time high is not very far away. I mean, it's like 1 or 2 good days and you can take it out. If you get 3 good days in this week, you may actually see an all-time high this week. I'm not so sure it'll happen this week, but yeah, you got the settings on the table as such that you are going to be headed there. First rates, Monday morning, after 2 weeks of consolidation, it's a flat start, absolutely flat. Red, green, that direction does not matter, but the fact that you are there's a complete flat print. Breadth is looking meaningfully better. meaningfully better in terms of what the breadth is. You're going to start with Tata Motors and Cipla. There are two numbers which came on Friday. Tata Motors after market hours, Cipla during market hours. Tata Motors is where you will see a result reaction. Let's see what the result reaction is. I don't have it on my screen, but it's a 17 rupee uptick for Tata Motors, which means markets are saying hello. These are good numbers and they need to be rewarded. I was of the view that it could be a case of buy the rumor, sell on news, but markets are markets. They sometimes don't go in the way you anticipated. Cipla, and then you want to look at DMart because for DMart, for the quarter gone by, things were not very impressive. They were not impressive at all. So Cipla's down. There you go, Aisha. I mean, nothing, numbers were not howler, but it's an expensive stock and a little bit of slip here and there, and it just becomes a casualty boy for them.
Let's see whether these dips get bought into or not for Avenue Supermart. Rarely do you get such price action there. But by the way, it's not just Tata Motors alone. There's impressive set from Colgate as well. The numbers have been in line. EBITDA has shot up about 5.25%. Colgate too starts off in the green. DLF was a very good set of number, especially because the net debt has declined 2% higher for DLF. It's now nudging 445 per share. Manappuram Finance as well, Q4 above estimates. VP Nandkumar has got the interim stay order from the High Court. We're going to be chatting with the management as well. Naveen Fluorine was another good set of number. The margins have clocked in at about almost 29% versus 23 on a year-on-year basis. Revenues have shot up about almost 70%. HPCL too, wherein the margins have risen about 330 basis points on a sequential basis. GRMs are above estimates. Ami Organics, Advanced Enzymes, Rainbow Medicare, these are all good set of numbers, and you are seeing positive reactions come in here. RVNL, the joint venture has bagged another order worth about 2,250 crore rupees for an irrigation project in the state of Rajasthan. RVNL shoots up another 7%, and why we mark this stock is because some of these names saw a steep correction play out in the last week. IGL though, that's been a disappointing set. Their Q4 volumes have come in below the estimates. Revenues as well have come in flat on a sequential basis. Max Financial too, the VNB margins have come in lower than what they had in the same quarter last year. The total APE though is up 38%. Max Financial too lower by about 2.25% as we speak. APL Apollo, Sonata Software, Affle, Lakshmi Organics, these are all set of numbers which have fallen short of market expectations. Sonata down 7% now. And Affle as well, we just chatted with the management, although they are hopeful of a recovery come by. But Affle has taken quite the knock. It's down 4.25% as we speak right now. But the bright spark here is Tata Motors, surely 3.5% higher on that stock. Kunal, what trades are you punching in, considering you already have Tata Motors in your portfolio?
I think Glenmark is the other stock which looks attractive, trading above that 600 mark, confirmed a breakout sometime back, looks attractive. So that's a stock which I would continue to be, I was bullish on it in the last 1.5 odd week, would continue to hold on to the stock.
Okay, Glenmark it is. Kunal has been reiterating that this is a stock that he's very bullish on. What about you, Nooresh?
So that would be L&T. The stock has come down a bit post the numbers, giving a good opportunity, expecting it to bounce back from it.
Yes,